Ladies and gentlemen, good day and welcome to Geojit Financial Services Limited Q4 FY’25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Satish Menon, Executive Director from Geojit Financial Services. Thank you, and over to you, Mr. Menon.
Thank you very much, and good evening to everybody who has joined for this quarter 4 and the final results of Geojit Financial Services. With me in this call, I have our Chairman and Managing Director, Mr. C.J. George, my colleagues on the board, A. Balakrishnan, Executive Director, and Mr. Jones George, and also our CFO, Ms. Vinny Nair, and Liju Johnson, the Company Secretary. Thank you again for joining this call. I will just give a brief about the financial results, the highlights of the results, and then we can open for Q&A. In terms of total income, for the quarter 4, we did 177.48 crores, PBT of 39.9 crores, and a PAT of 32.21 crores. For the full year, financial year 25, the total income was 749.32 crores, which is a 20% growth from 2024. PBT of 222.68 crores, which is a growth of 16% over last year, and a PAT of 172.49 crores, which is a growth of 15% over last year. In terms of split of income, equity and equity related, that is the brokerage part, we did 76.87 crores in the quarter 4, and for the full year it was 423.93 crores. For the full year, the growth is 13% over the last year. Financial products income for the quarter 4, the income was 71.57 crores, and for the full year it was 204.47 crores, which is a growth of 35% over last year. This time we have given a split of the other income also in our shareholders presentation, primarily coming from Geojit PMS, which had a quarter income of 6.8 crores, and for the full year it was 34.99 crores, which is 88% more than the last year. Whereas the treasury income, 13.05 crores for the quarter 4, and for the full year 59.64 crores, which is a growth of 14%. So total operational income, 176 crores for the quarter and 747.91 crores for the full year, 22% higher than the last. In terms of expenses, employee benefit expense, which is one of the larger ones, 72.64 crores for the quarter and 264 crores for the year, which is a growth of 20%. Fees and commission expenses, that is what we pay to our authorized persons, 23.57 crores for the quarter and 101.13 crores for the year, 17% increase. In terms of other numbers, the customer assets for Geojit, which includes demat holding plus mutual fund and all those distribution assets, was at 1 lakh crore. The recurring revenue assets was at 22,653 crores. This is this bifurcation. In terms of total mutual fund AUM, we are at 14,728 crores. Life insurance premium, the book was 372. PMS, the AUM is 1,262 crores. And smart folio AUM is 1095 crores. This is what I wanted to say at the beginning. We can now open up for Q&A. Operator, you can open up for Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Once again, a reminder to all the participants that you may press star and one to ask a question. Once again, a reminder to all the participants that you may press star and one to ask a question. The first question comes from the line of Mr. Thomas, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, Mr. Thomas, please go ahead.
Yeah, okay. Yeah, my question is related to your expansion in the Dubai region. First of all, congratulations on receiving in principle approval for setting up our entity in DSP. Could you elaborate on the reasons behind this move and how do you envision this contribution to company's overall revenue and profitability in the medium to long term basis?
I would request Jones to reply.
Yeah. Good afternoon. This is Jones George. I'm hoping I'm audible.
Absolutely.
Yes.
Yeah. So the NRI business is a significant part of Geojit's growth. Even currently, 20% of our AUM comes from the NRI segment. That's mainly through our joint ventures, and we also have NRI clients here in India. Now, within these NRIs, we have around $100 million investments in dollar products, which we are selling. We only have limited products to sell right now because there are not that many products available. DIFC opens up and allows us to sell multiple products that can cater to the needs of our clients. So we believe that DIFC will give us the opportunity to get a larger share of the wallet, and it will take about 3 years for that entity to turn profitable.
Okay. I have one more question. What are your future plans regarding the branch expansion and employees hiring? Are there any specific geographies or verticals you are targeting for growth?
I will take that question. So in terms of expansions, yes, Geojit today, of course, has more than 500 outlets. This year, we intend to open close to around 50 branches. And in terms of sales force, addition to the sales force, yes, we have an aggressive plan. We intend to hire close to 1,000 plus employees, primarily on the sales side and primarily on the distribution side of the business. There is no particular geography, so-called scene. We will be expanding in those cities and towns, maybe tier 2, tier 3 also, where we do not have adequate presence now to capture the need for capital market products in the country.
Okay, thank you for answering my questions. Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Once again, a reminder to all the participants that you may press star and one to ask a question. The next question comes from the line of Zahara Sharif with Fedwin Tech. Please go ahead.
Hi. Thank you for giving me the opportunity. Could you elaborate, your plans on, the wealth management side of the business and what progress you've made so far, and what are some of the things you're planning to do over the next maybe few years? Just give us a sense of, how you're expecting those things to play out.
Hi, this is CJ George. The private wealth industry, as you are aware, is one of the fastest growing industries in their segment, in that particular segment of financial services industry in India. So we have large number of our clients, among whom there are high net worth investors, ultra high net worth investors. So we do not have the access to private wealth products at the moment, and that is the reason why we started private wealth initiatives. So our plan is to aggressively expand this business, particularly because of our NRI Connect. Our DIFC entity is also to be seen in this context. So our plan is to increase this business in the current geographies where we are strong, and then slowly expand to the new geographies where we have currently lesser presence. So this is the strategy that we are adopting. Today we have close to 1,500 crore of AUM. We intend to grow this AUM to something like 20,000 crore in the next 3 years time. This is the plan at the moment. So we are going and expanding slowly but steadily, and we have a growing base of investors. So we are very confident of growth in this segment.
Sorry, did you say you're expecting the assets to go from 1,000 crores to 20,000 crores in the next 3 years?
That's right. This also,
okay.
I must tell you, this also includes our plan in Middle East.
Right. And how are you sort of, just if you can give us a sense of, what you're expecting to spend to sort of build out the team maybe, or, how will you assess, your own productivity and, that you're getting further on the path to your goals? And also, are these assets, coming from new clients or, existing clients sort of getting bigger share of wallet there, or just if you could also give us a sense of that?
This will be a mix of both new clients as well as our existing clients. Particularly if you look at our Middle East, geography, we have 50,000 plus clients, and large number of them are high net worth investors. So everything put together, the India expansion as well as the Middle East expansion, we are basically projecting this kind of a growth. If you look at our total asset size of around 1 lakh crore, significant part of these assets are owned by high net worth individuals, where we are very confident that if we give access to private wealth products, the AUM can also go up.
Okay. And sorry, what was my previous question about, in terms of team expansion and spends and stuff on this side?
Currently, we have 54 relationship managers. We intend to grow this to 100 in next 1 year to 18 months.
Okay. And what is the breakup between India and outside India?
So this number, I have not included the Middle East expansion, because it will be in the beginning of 2026 that we will be able to operate full swing in DIFC.
But so when you say you're going to go from 1,000 to 20,000 and you're sort of planning to tap into your existing HNI base, this HNI base is not in the Middle East, this is local. How will 54 RMs here?
If you look at Geojit's customer base today, a significant number of customers are already NRIs. We have around close to 20% of our revenue directly, indirectly coming from the NRI base. So we will explore the possibility of expanding aggressively in the Middle East. Having said this, we will use this expansion of our existing branch network as well as the increase in the number of RMs for growing this business in India. Close to $1 billion AUM we have already in Middle East. So I don't think it is very tough to expand to 20,000 crore AUM in this market with our current strength in the business.
Okay. And what do you expect the yields to be sort of on these assets, or initially it's just going to be acquisition and they'll turn into revenue generating later, or will they be revenue generating assets from the get-go?
This will be largely a distribution model. So currently the yield is around 70 basis points. We are of the view that this will be around this region.
Okay.
And it will be slightly on the higher side in the Middle East.
And can you just give us a sense of, what you expect the outlays to be? I know it's not so much CapEx, but it's going to be OpEx. But, just based on your experience so far, how much time will it take your RMs to sort of become profitable? What is the kind of experience profile you're hiring for? Are you training internally? Just sort of what is the spend budget, if you will, on this side, regardless of the revenue budget?
We did not disclose these numbers to the market. But I can tell you it is around 1 year to 18 months for an RM to, today break even.
Okay. And is there anything else of significance that you think we should sort of consider, keep in mind while looking at this side of your business going forward over the next 2-3 years? Not like a guidance, but just anything operationally or strategically that we should think about?
We will be focusing on this retail distribution of mutual funds, insurance, etc., to large number of retail clients, the mass affluent. So that will be the key focus area, and that is where you will see significant traction in our business.
Okay. Just one final follow-up. How do you define mass affluent?
So in our case, the segment that we have taken is around 20 lakh plus investable surplus. So this is the segment that we have been operating and we are familiar with. So that is a segment where we are seeing the stickiness also is very high. So we will concentrate on the branch relationship, the face-to-face relationships, and develop that business aggressively.
Okay. All right. Okay. Thank you. If I have any questions, I'll just come back in the queue. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Joseph, an individual investor. Please go ahead.
So, thank you for the opportunity. Yeah, I've got a couple of questions. It's been a very successful track record in terms of AUM in mutual funds. So could you please throw some light on what is the growth trajectory for the AUM and the PMS business, as well as if you can throw some light on the insurance segment too? Yeah.
Okay. So Geojit Mutual Fund AUM, as I said in the beginning, stands at 14,728 crores, which has grown 21% over the last year. The PMS AUM of Geojit managed PMS is 1,262 crores, which is 38% growth. So that is a growth in the mutual fund and PMS. Second question was on insurance, right?
Yes, sir. Yes.
On insurance, the last year the new fresh premium collection was 117 crores, which was a growth of 15% over what we did in FY'24. We don't give forward-looking numbers, but that is both the segment, mutual fund and insurance, are growth areas for us.
Oh, great, sir. I got one more question, sir. Can you just share the current split of the brokerage revenue in cash from the segment? As well as like how is this client is actually behavior on these trading patterns?
Okay, so some of you as would be aware that Geojit has not been very aggressive on the derivative side of business. And the share of the derivatives income in the total brokerage has been lower. If you look at FY'25, of the total brokerage of 296 crores, 16% is the contribution from derivatives, whereas 84% is from cash market. And if I give you the comparison of March 24, that is FY'24, it was 19 and 81. So for us, derivatives is a very small business, and we have been consciously pushing delivery business more, even on the cash side. So for us, the traction is still remaining the same. Push clients towards long-term investment rather than short-term trading.
That sounds interesting, sir. That's all from my side. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. The question comes from Chandar Bhatia with Sears Fund Management Private Limited. Please go ahead.
Hello.
Hello.
Am I audible?
Yes, sir. Hello.
Mr. Bhatia, please go ahead with the question. Mr. Bhatia, if you have muted your phone, please unmute yourself and go ahead with the question. Since there is no reply from the line of Mr. Bhatia, we'll take the next participant. The next question comes to the line of Zara Sharif with Fedwin Tech. Please go ahead.
Hi. Thank you for letting me in again. Could you share with us what is sort of your employee base and the breakup between the different lines of business for the team?
Okay. So as of March end, we had 2,858 people in the financial services business.
Okay.
Of which 2,063 would be in the frontline sales. Was that your question, Zara?
Yeah, and also just within that, in terms of the larger initiatives, the way you've broken up your division, like how to think about that, the wealth management versus, the broking side versus insurance, and if there's any kind of anything that give us insight into how it's working.
Zara, we operate on an all-in-one model. There is no specific people to do specific line of business. So we have branches. A branch may consist of anywhere between 5 to 10 member team, or maybe more if it is a bigger branch. And these branches are supposed to deliver and cater to clients' all requirements. So we don't have specific people for broking. We don't have specific people, different set of people for distribution. We manage a relationship with the client as a relationship manager. So like we do in private wealth, where CMD just said we have 54 people which caters to the private wealth clientele. In our branches also, we call them mass wealth manager, where they cater to all requirements of a client. So an individual in the branch would be selling brokerage, will be selling mutual fund, will be selling insurance and all other products to a particular client.
Okay. And so the private wealth offices will be different then? They will not be sitting in the same branches or whatever?
Yeah, they said absolutely different. They have different offices and they operate out of different offices. It is not mingled or coexisting with the branch.
So what will a typical private wealth office setup be like? Just like you said, the broking side, will have 5 to 10 employees depending on the area and sort of size of operations. Just how will the private wealth side look like in that sense?
So it
and
depends
will there
on
be
the
any
location.
overlapping?
It depends on the location. There will be overlap. So let me also tell you, our own existing all the clients, they are also being referred by the branches to private wealth RMs. So there are places where we have 1 or 2 RMs. There are places where we have a bigger team. So this is something that we are growing at the moment. Depending on the requirement, we are basically looking at our existing, customer base also. So we are quite confident that the current arrangement is working well as of now. Certain places we may have one, but the idea is cater to the requirements of our high net worth clients.
Okay. And just in terms of, I don't know if you share this, but what does your typical, branch look like in terms of size, and also like, what are the fixed spends there, and how would the private wealth office be different? I'm assuming they'll be a little more upscale and expensive in terms of rentals and stuff as well. So if just you could give us a sense of that, if possible. And
Private
also how you measure. Sorry,
Yeah.
please go ahead. I'll follow up later.
Go ahead.
No, please.
Private wealth,
Okay.
private wealth offices are relatively costly, and also these are places in metros. Although the number of RMs in the office will be less, these are setup cost-wise, these are relatively costlier. But all other retail branches, these are branches that even new branches are breaking even in 2 years' time. So these are offices in probably semi-urban areas. That is where we have been opening offices of late in Tamil Nadu, in Kerala, etc. So the size of the office in retail is close to 500 square feet.
Okay. Okay, and like what would rentals be like?
Sorry?
What would rentals?
That depends on the location. We don't, normally for the retail branches, we are not looking at high street branches with roadside visibility, etc. It could be on the first floor. So depending on the location, it changes. And also the place. We have branches operating with 15,000 rupees per month rent to 15 lakh rupees per month rent. So it depends on the location.
And how do you measure productivity of your clients? Of your employees? On the sales side, or
it's basically on the basis of the revenue that we get and the AUM that they have. Okay. And the AUM is the productivity measure that we use.
So is there a benchmark that you work with? And do you sort of consider closing branches if they're not doing well, and how much time do you give them? Or I know organically you all have sort of, allowed for growth to come at the pace it does, but still, do you have any kind of sort of policies around that now that you are changing things a bit?
Looking at the size of the market in India, we have not closed branches. Very few branches we have closed. We change people rather than closing branches.
Right. Okay. And you all recently changed, I think, your interface, the tech interface, user. Why have you done that? Was there a sort of strategic reason to do that? I think it's been quite majorly overhauled.
With the trading platform?
Yeah, I can take that.
Yeah.
All of our platforms have undergone a transformation from a user experience perspective and feature functionality. This is basically, changing with the client expectations and demand. And we have also instituted an innovation team in-house where we will continue to see how we can improve our platforms, add more features, and this will keep happening.
Okay. Because, your interface used to look different, and now it's increasingly looking like those of some of the others. So I was wondering if there's some kind of pressure to be like a Me Too kind of, like what, because you have an in-house team, I'm thinking you've not, sort of taken on some kind of platform available in the market and adopted it. So I was curious. The reason I know this, of course, is because I've been a client for more than 20 years. So just wondering why you did that.
There are certain parts of the platform, for example, the watch list, in which the data that you see will be largely the same across across any other.
We lost you when you were talking about the watch list.
Yeah. So we've added much more information and data as well as analysis into the platform, which you will see in different parts of the app. So I think similarity would be restricted to maybe a very small part of the app.
Okay. So it didn't have much to do with sort of getting ready for scale, if you will, in terms of the size of operations that you're looking at. It was just like about the features and stuff, or was that also an element in terms of why you did what you did?
No, it came more from an innovation perspective. Having said that, digital client acquisition will be one of the pillars of growth going forward.
Okay. Okay, cool. All right. Thank you. Thank you so much for taking all my questions.
Thank you. A reminder to all the participants that you may press star and one to ask a question.
If there are no further questions, we can close the call.
Thank you. On behalf of Geojit Financial Services Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.